Dear viewers, welcome to ATS Mutual Funds. In this video, we are going to check complete details about SBI Multi Cap Fund direct growth. Let us start with the basic details. Current NAV of the fund is 10.06. Minimum lump sum amount to be made allowed in the fund is 5,000, and minimum SIP amount is 500 rupees for SBI Multi Cap Fund. And here, if you see, the fund is launched in 8 March 22. That is just 6 months before. And currently the fund has an whopping AUM of 9,614 crores. There we have to definitely give appreciation to SBI Multicap Fund for its marketing capabilities of their funds. Now let us check the asset allocation across market caps. Currently, large cap stocks are 53%, mid cap stocks are 37%, and small cap stocks are 10% in the portfolio. As per SEBI, a multi-cap fund should have 25% minimum investment across all the categories of market caps. But in this, only 10% is there. We have to find out the reason for that. And before that, let us check further more interesting facts of the fund in the video. Here, the fund follows a growth-oriented approach. The reason for that is growth stocks in the portfolio are 58%. And value stocks in the portfolio are only 8%. Remaining 34% are stocks that are blended with value and growth. So here also, if we take 50% to growth stocks, then 75% the portfolio is growth stocks, and only 25% is the value stock. Thus the fund follows a pure growth approach of investing. Now let us check the asset allocation across industries. For SBI Multi-Cap Fund, there are more investments went into consumer cyclicals. That is because there are investments in auto sector more. That's why consumer cyclicals are has more weightage in the portfolio. If we see broader indices, any indices, mostly financial services will be the major portfolio holding. But in the case of SBI Multi-Cap, consumer cyclicals has major portfolio holding. And after that, there is financial services, of course, and then industrials, then healthcare. All these sectors, basic materials is there in the third place with 14.13%. So in healthcare, these kind of sectors will perform whenever there is a economic backwardness, these kind of things. But consumer cyclicals will perform only when the markets move heavily or markets are positive. If we see the portfolio holdings, the top 14 to 15 stocks have only 52%, while the total stocks in the portfolio is only 35%. So top 15 stocks, 14 stocks has 52%, and remaining 20 to 21 stocks has remaining 50%. Thus, it gives us a chance for an investor to capture the growth given by all these funds in the respective weightage. Now let us check the assessment of returns. SBI is new fund, as we discussed. It has launched just 6 months ago, and S&P BSE 500 total return index gave minus 8.86% return, while the 6 months return of SBI Multicap is only minus 4.92% mark. The fund does not fell much, and during the positive time of last 3 months, that is 2.59 was given by S&P BSE 500, while SBI Multicap Fund has given 3.39%. And in last 1 month, broader indices gave negative return, while SBI Multicap Fund gave positive return. So as this is a new fund, there are no CAGRs available to compare with 5-year to the industry, but this is relatively new fund, however performing well in the short term also. As this is a new fund, there are no ratios like standard deviation and risk to reward ratios for that available in the public domains. So we are moving to the part of key highlights. Key highlights of the SBI Multicap Fund is there are only 35 stocks in the portfolio, and high exposure to consumer cyclicals, as we have discussed previously, and top 15 stocks contribute to only 50%, while in other funds you can see some difference, like top 10 to 15 contribute around 40 to 70%. And one benefit to have consumer cyclicals is during the weak periods of economy, consumer cyclicals might not perform well. But stocks, if available at discount prices, the investment in the stocks at this point of time can be attractive valuations. Now the economy is little weaker because of high recession in US. At these times, if the market falls down, so we are investing now in consumer cyclicals. When the market revive, we will be definitely in the profits. That is our opinion. So as they can give fairly good returns during the upturns of the economy. The investment in consumer cyclicals. Now coming to important part, should you invest in the fund? You can invest in the fund only when you have 5 to 7 years investment holding capacity, and the best suggested mode of investment is a lump sum followed by an SIP. And mid and small cap exposure is also there, and the small cap exposure, I hope it will increase in future. And high volatility is expected in the fund due to the different asset allocation method followed by SBI Multi Cap Fund. Thanks for watching the video.